So there's a ton of insane stuff happening to Senseonics stock again, actually being up almost 10% since the recent lows as well. These occurred as a result of gapping up almost 150% after the recoveries from the even crazier more than 1,500% jumps we've seen at the beginning of the year. And as the second quarter earnings report is now also officially released, what we are going to do today is give you an updated insight into what is happening to Senseonics stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is absolutely crucial to consider before buying the stock, make sure to stay tuned. But before we jump right in, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, let's start talking about the stock. And in the case of Senseonics, we're looking at an especially amongst investors well-known manufacturer of glucose monitoring systems, or CGMs, which make the process of testing glucose considerably easier for diabetics. But before we start going a little more in depth in the company, and, as also emphasized in the just released earnings call, its partnership with Essentia as well as some short squeeze data, we definitely have to start with the new published financials, including second quarter revenue. And taking a deeper look at these numbers, it quickly becomes apparent that it's definitely going in a good direction here as well. The company brought in a total of $3.3 million in income, including $1 million out of the US and $2.3 million from international sales. Furthermore, the total revenue from 2021 is now expected to fall between a whopping $12 to $15 million, also equaling the $15 million we predicted in our last videos. With cash on hand of nearly $200 million and debt of only $110 million, this actually seems pretty reasonable. And, in addition to the remarkable progress Senseonics has made in commercializing its product line in the multi-billion-dollar diabetes market, which also got mentioned in the recent earnings report, there is one thing in particular that makes the company super interesting and sets it apart from its competition, Senseonics Eversense XL product. And this commercialization of the Eversense XL product is pretty much what most investors are betting on right now. However, the recent massive jumps in price are largely due to an entirely other cause: tremendous hype, especially amongst retail traders. In fact, the stock soared more than 1,500% at the start of the year, on top of the previous 150% recoveries following the first pullbacks. But in the end, it was pretty much just one thing that made all the jumps possible in the first place: the pretty much excellent meme stock conditions the stock had before breaking out. And we're talking about a short interest of as high as 25%, which combined with the single-digit price and small float of just 280 million shares at the time made Senseonics stock equivalent to most meme stocks that had lately gapped up some massive amounts and enabled the then-happened short squeeze at the beginning of the year. However, and this is crucial to remember for our prediction, these devices haven't merely piqued investors' interest. In fact, Essentia, a major competitor in the global diabetic care market, just partnered up with Senseonics and was now announced to also take full commercial operations for the company. They additionally agreed to distribute the Eversense XL product across Europe, opening a huge new market with a lot of potential. Furthermore, Essentia has vast industry experience, which will be particularly useful when trying to establish the brand in Europe, while Senseonics, on the other hand, offers a number of major advantages over its US competitors with the Eversense XL device. It is, for example, the world's first long-term implantable glucose monitoring system, according to its website, with the ability to stay in place for more than 3 months, an incredible improvement over the standard 14 days. So considering this and the mentioned new released earnings, Senseonics definitely has a promising future, particularly in the rapidly growing diabetes sector. Additionally, we got a really solid product line, being able to lead the global diabetic care market with some unique features which give it the edge over its competition. Alright, with that being it for today's video, thank you very much for watching. If you liked this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot, and see you next time.